clear some of this stuff out. We were just breaking down the trade during London that some of you guys could have taken. I don't know if anyone did or anyone trades London in here.
Not majority of people from my group, but
Okay.
while you're doing that, I can talk about the fundamentals real quick.
Oh yes. Here, let me
What are we
share your
expecting?
screen.
No, you could just do the chart, and I'll just speak in the background.
Okay, sounds good.
All right, so we have PCE coming out today. Yesterday we had advanced GDP coming out. A lot of times you will see that being adjusted. So if you just click on the folder next to it, you'll see that the last couple of times they have adjusted, according to the previous, and then also what the actual was the month before or the quarter before. Yes, if you click on that, for example, in July the actual was a negative 0.9, and then this time they put the previous as a negative 0.6, so that was adjusted. Take a look at the quarter before that. So I'm talking about, yep, these numbers right here. That was a negative 1.4. They adjusted that to a negative 1.6. So I wouldn't be surprised if they ended up adjusting this number as well. And then I do think that with these adjustments, obviously, advanced GDP, there's three types that come out. There's advanced, there's prelim, and there's final. Advanced is the very first one that comes out, and they usually do adjust that after a couple of days, after they're done with their calculations and all that type of stuff. And we've seen the same thing happening with NFP and a couple of other data points as well. So as of right now, I do think that with all the data points that we saw for the US coming out in the last couple of weeks, it was more of a way to push US 30 or any the USD pairs up to a strong resistance level, the weekly resistance levels, the monthly resistance levels. When we go onto the technical side, you'll see that. And then with today, we have PCE coming out. We know that inflation is increasing. There's no way that we're probably going to see, a decrease in core PCE coming out. So even with the 0.6%, which is the previous, and then the 0.5%, which is forecasted, that doesn't mean that it's a drop down in, the growth. The growth is still there. The growth is going to slow down when you drop down to 0%, which would mean that core PCE price index remains at 0.6% as previous, or it comes down into negatives, which means that that's really when it's decreasing back down. That's what we need. That's what we need from CPI. That's what we need from core PCE price index. That 0.5% just tells you that it's still continuing. There's still inflation. It's just at a slower pace. That's about it, right? Because these are all percentages. So if this comes out higher to up to around another 0.6% hike, the market has already kind of priced that in, right? We're prepared for higher PCE numbers to come out. But if it comes out to a 0.7, 0.8 or anything higher than that, that would be a surprise in the market. Or if it comes out below 0.5%, then that would be a surprise in the market. But regardless, as long as there is some sort of a growth happening with PCE here, we can expect the Fed to come in even more aggressive. So now the 0.5 discussions, like a half basis point hike discussions, they're not even on the table anymore. We know for a fact that next week, at a very minimum, the Fed is going to increase the interest rates by a 75 basis point hike. And they've also increased their target going up to 5%. They were going up to 4.75% by end of, not even end, but middle of next year, around summer for the interest rates. And then now they've increased that up to 5%.
I was a little surprised by the Bank of Canada only going by 50 basis points.
Yeah, I think around this time you start to see that sort of a slowdown. That's why last year when Bank of England increased their interest rates by another 75 basis point hike, it took the market off guard, essentially.
Yeah, with our PCE over here, I think a lot of it's priced in right now. And if you look at the last few months over here, we haven't had much of a surprise. The only thing that you're going to get when it comes to big moves is going to be a surprise number. And I don't think we've had many surprise numbers. We've had more than expected or less than expected. But again, like you said, it's not really lowering inflation if we get 0.05 or 0.5, right? Or even 0.4. But if we start to get negative numbers, we'll start going into that positive category, if you will.
Yep.
So that's what, as Sharma was saying, that's what the banks, institutions, everyone's been waiting for this week is this number, and then obviously GDP and unemployment. But the main number, I think, is PCE, being that we're in such an inflationary environment right now. And then Obviously, you got the University of Michigan data coming out, consumer sentiment and inflation expectations around 10 a.m. So looking over here, we'll start with gold since it's 821 already. And I'll try to do this quite fast here. So again, monthly candle, pretty much the same, right? We created that top wick, respected the high, many monthly bearish candles over here, and now the same one. We're coming to the end of October, so right now the current monthly candle is still bearish, and it could very well continue to push down depending on the numbers that we get. Weekly over here, we've been holding our support. We ended up holding a resistance at our previous support 1700 over here and just pushed down, right? Just like we did over here after creating that resistance up here in the key area. Ended up just pushing down, retesting the low over here, and kind of holding a minor support with this candle. Then we created the top wick, passed low, and continued down from there. What happened here? Same exact thing. We retest the low after retesting a previous support. We pushed down, we end up holding support at the previous support over here, right? Top wick form, we flip bearish, right? And we could very well continue right back down, especially if we get any surprise numbers of high inflation. You could see this thing drop today, right? Maybe we even break below 1630, 1615, who knows? But I think a lot of it's priced in and we won't get that big of a surprise of a number. Although with that said, yesterday did surprise me. I don't know about you, Sharma, but
Yeah.
the GDP surprised me big time.
Yeah.
So who knows? You know, we got elections coming up, so maybe they had something to do with it. But I think it's a positive sign that, you know, GDP towards the end of the year, maybe holidays are coming in. You know, it's the end of October, November.
I think it's also because earlier in the year, or earlier in the quarter, at least the first 2 months, we saw like there was still, you know, some production and things like that. Like it was still, you know, we saw some growth essentially. Mm-hmm. But when we started looking at, you know, these companies that are laying off people, a majority of that didn't happen until like later into the quarter, right? Into like, I'm talking about like maybe the last month, a month and a half. And then obviously that itself cannot skew the entire GDP data. The GDP data is just about like, you know, the finished goods and, you know, the productions and things like that. But what we actually saw happening in the economy on like the low impact side and more of like the actual prices and inflation and all that stuff, there's the GDP price index, I believe that's what it's called, that came out, and that's what it reflected. Exactly what we were talking about. Yeah, so the price index, advanced GDP price index, dropped to 4.1% from a 9%, which was previous. So just advanced GDP itself, you know, without taking prices into consideration and everything like that, yeah, that came out to like 2.6%. I believe that is like from the first to about a month or a month and a half. And then the price index is really what reflected what we really saw going on in the latter half, which was huge.
And some of that is just the dollar's impact.
Yeah.
In that, so the GDP mix is going to include the increasing strength of the dollar itself, which is making that number a little bit of a false. I'm not going to say, I shouldn't say a false reading. It's just that it's because everything's costing more. It is positive.
Yeah.
What's up, Andy?
Good morning.
Good morning. How are you?
I'm doing great.
Andy's in the zone. I like it.
It's going to be a fun day.
What's up?
I said it's going to be a fun day.
Yeah, should be. All right, so again, gold over here, like we were breaking down in the beginning of the week, we ended up coming back into that range between 1660 and 1680. Remember that previous range that we ended up breaking once we broke 1680? We held support, faked it out over here, held support again, held it as resistance. Now we broke above it, and this is what I was saying yesterday and the day before, to be careful when you're coming up into this area, because now we're entering this range again. Any point we could create a lower high like we did here, right over here, which we ended up doing. Bearish candle closed, top wick form, passing the low of the previous, and now we're breaking previous supports over here. So can we continue down? We got 4 minutes left, 4 hour over here. Already created a top wick, past the low of the previous candle right now, and it's continuing right back down.
Yeah, Daddy.
Okay.
So now, hold on. We got a support right in this area, that we could see price coming down into. We got a clean move below that. Again, like I said, you get any surprise numbers, I do think they're pricing a lot in. They were grabbing liquidity up here. Now they're expecting, obviously, inflationary numbers. Maybe not a big surprise, but they are expecting, I think big institutions and everyone are expecting a bigger inflation number. I wouldn't be surprised. So maybe that's what's getting priced in right now. But if you look at the 1 hour, we're going to adjust this right here. Obviously, you got 1660 marked off here. But that was your previous support. And if any of you guys trade London, it's a beautiful move. You got the clean close below that support right here. Top wick form, pass below the previous candle. You'd still be in, right? But right now, we're holding a resistance right in this area. We ended up breaking below that previous support over here, retesting it, rejecting it, and now we're pushing strongly below that area. And I'm just going to move this right down here as our current support that we end up coming into. I like the 30-minute. I like the 15-minute, the way we ended up coming up into this area and rejecting with this candle right here. It's a beautiful move. Unfortunately, it happened right before news is coming out, so it's hard to take something like this, but a lot of times I do like this setup. I would lower my risk here just because the range, if you take it after this candle passes the low, coming into this whole area right here, you only get about 15 to 17 pips. So it's a little difficult for you to take that. But, based on this setup alone, we've seen it many times. A lot of times we end up coming into this region over here. So you can expect that, and you definitely want to secure somewhere in here. But, right now we have a little support over here. Can we expect, once the news comes out, for us to come back up into this area, hold a resistance, and then continue down? Right now we're pushing. And right now it's good because we're creating a range, right? So we could very well come back up, grab liquidity, and then continue down after the news comes out. But again, as we always say, wait for the news to come out, wait for the reaction, see what happens, and then trade your setup after that. Keywords: trade your setup. The ones that you're used to taking. Not just any setup, but the ones that play out most of the time. Because trading news is really gambling. You guys got anything to add, Sharma?
Nope, it's just that you got news coming out in a couple of seconds, so just be extremely careful when you're looking for your trade opportunities. At least don't try to hop in the first minute, right off the bat. There's obviously going to be volatility. This is something that the Fed is looking for going into next week. So just give it some time. And again, trade the potential setups that you trade.
100%. Put this over here. Gonna get this over here. Financial juice. Where's KB at?
I'm hitting, brother.
What's up, buddy?
I'm good. How are you?
Great,
All right,
man.
let's go.
Alright, what do we get?
A little drop. Big drop. Nothing's coming out here so far.
Oof. US 30 just completely flipped.
Did it?
Yeah, I'm gonna wait on it though.
Canada GDP.
Better than expected.
Better than expected?
Looks like it. 0.4.
Okay.
Let's see here.
Okay.
There it goes. Wow. 200
yeah.
points right away. Woo.
Okay,
Wait, it
that's
came
good.
out to 0.5. No, Wendy?
It's weird. Yeah, Forex Factory shows one number and Financial Juice shows another one.
That comes right into what you were saying with the adjustment. Yeah, 0.05, exactly expected.
Yeah, 05.
PCE price index 0.03, 5.1 year over year. Huh. Well, I mean, it dropped over here on Financial Juice.
Yeah.
This is where that Reuters icon would come in handy.
Yeah.
I'm gonna wait it out for US 30 though, because we're kind of in this 4-hour consolidation.
Let's check out US 30 real quick. Oh, wow. Yeah, there you go. I cleared it thinking that we were going to break it down today.
If you hop up to the 4-hour real quick.
Sure.
we're kind of sitting in this consolidation here, so I'm gonna annotate here. Yeah, exactly, that support. And then also you've got this entire resistance area. I'm gonna annotate here real quick, Steph.
Sure.
You've got this entire resistance area right here as well. And then when you look at these levels and you hop up to the daily time frame, you start to see how the last couple of daily candles, they're losing out on that volume. Yeah, there you go. So 2 days ago, left a nice top wick, came back down and closed right into that range. That's what we ended up doing yesterday too. If you extend that top resistance level that we just created on the 4 hour over to the left, then you'll see this is a level that price has reacted to several times in the past. So what I want to see is, can we continue pushing past this and then go up into 32,500, 600 area and then see a sell off from there? Or is price going to hold on to a resistance here and then continue pushing down?
Yeah, the markets had a hell of an October. I was saying yesterday that these candles, to me, with how overextended we are in the downtrend, especially this candle right here that closed yesterday, tells me that there at some point we could get a pullback. Because if you look at the price action here since January, just been making these lower highs. You see a couple lower highs over here, right? Then you get some over here, obviously this one. But could we end up forming a lower high right here and then just, continuing right back down from there?
Well, absolutely. Absolutely. Because when you tap into that 28,800, which is that support that price made, that, if you look on the weekly and monthly levels to the left, that was the 2020 resistance before, COVID happened and the market just dropped down. And then after that, that's when the liquidity was provided. We come back into that area later that year, back in August, all the way up until October, and then finally break out of that in November before continuing back up. We know around the end of the year, the stock market does tend to gain or appreciate a little bit, right, in prices, and then you'll start to see some of those corrective moves. So that's clearly the level that was so important, and then the liquidity was provided by the Fed. If you're going to continue breaking below that, it's a free fall until 26,000, 25,000, and then the Fed is going to have to step in to provide more liquidity, which you obviously can't do right now. The Fed won't be able to do that if they're going to continue increasing interest rates, because then they run into the same problem that Bank of England did, which scared, a lot of international monetary organizations like IMF, for example, talking about on one side you're increasing interest rates, on the other hand you're providing liquidity. You are going to run into financial issues. You are going to have investors losing confidence in your financial markets, and then that's how you eventually lead up to the point of needing a bailout, because you have just dried up so much liquidity and you're throwing out so many mixed signals. So that's why, price has to go up into 32,500 area. It did almost yesterday, 32. I think it was 32,400 or something like that I went up to, just with the top wick. So it has to come up to these levels and then sell off from there, leading up to interest rates. So then it could come back and revisit the 28,800 area.
100%. Yeah, before we were down here, in the beginning of the year, I had a feeling once we started stalling out over here, I knew that, I didn't know, but I had a feeling that the worst of it would be us coming down to the previous COVID highs, and eventually the market would tank, and then, eventually people would calm down a little bit, and then maybe we could recover from here. Mm-hmm. But now nothing has happened yet. We're in a recession, but not what we know is probably going to end up happening. So I can honestly see us dropping below 29,000, 28,000, coming back down into certain levels 26,000, and even 18,000 down here. I don't want to fear monger, but I could very well see that happening, us holding support, then we consolidate around this area, and then we eventually continue right back up to create new highs.
I think 18,000 is going to be, before that even hits, the Fed is already going to be stepping in around that time.
Okay, so you think maybe more 22,000 we could come down to?
Probably the lowest. I'm targeting around 25,000, somewhere around there. And that's right into that monthly consolidation that you have here to the left.
Something like this?
Yeah, somewhere right into that area, because that's the exact consolidation that you have here to the left. So by the time price taps into this, we are going to have the Fed stepping in, or at least like, eyes turning more towards the stock market and equities in general. And then, yeah, a continued push up from there.
We should take a screenshot of this and look at it a year or two from now.
I'm down. Let's do it.
Wouldn't be surprised. Hold on, let me actually do that. I'm gonna save that onto my computer. Anybody
This
looking
could
at
be your desktop
Yeah.
for the 2 years.
Yeah, but then I don't wanna end up like feeling like I'm rooting against the market. It's like betting the under in a game.
No, this is the type of stuff that we need, like, as an economy, obviously. But I was, like, Andy and I talk about this all the time. I've mentioned in the group many times, too, that it's very fun when you're part of the market and you understand what's coming up, so then you can kind of, better position yourself and everything. But the most important thing here to realize is that these are real people who are getting affected. Like, there are people who will be losing homes and who will be losing a lot more in life, right? And like 401ks are just being like blown right now as equities drop. We know that equities will drop, right? But just taking that type of stuff into consideration, and then how can you better prepare yourself, because you're part of the markets. You're already more knowledgeable than majority of the people who are out there who don't even look at the markets.
Yeah,
Knowledge is power.
you got there's some key things that are front running like entire indices. If you just look in specific industries, you can see like 60%, 70, 80% drops off just from the beginning of this year.
Yeah.
So if you look at things like Open Door, you look at Zillow, you're seeing a massive loss. Look at what happened to Meta yesterday, down 22% overnight.
Yep.
Like, that's insane. Those are moves. Like 20% is a good like 5-year run for some people. That happened in a year, and they're on the losing end of that one in one day. And we can argue about Facebook and all that, but the point is that's like a massive parabolic move.
Just trying to post this on Instagram for you.
No worries, yeah.
That you talking, Andy.
Look at this Meta down 24% in the last 24 hours.
Yeah, Meta's been getting crushed this week.
Yeah. Jim Cramer was all but crying on air yesterday about it.
I bet. Jim Cramer just got
It's like there's like a 90-second bit about it, and he was just but like beside himself.
There we go.
I look at it more like discounted stocks, because we know that
Oh yeah,
the day and age that we're in, like, tech stocks are definitely going right back up.
Mm-hmm. Most of them.
Yep. Well,
Yeah,
at least
so
like Facebook and all of them, like, for sure, because they've been around for so long.
I mean,
they have to change their model though. There's broken. Their advertising model's broken,
Yeah.
and they need to fix it because that's the revenue generator.
I don't think the whole Meta move was the right thing to do.
I agree.
But then again, I'm not Mark Zuckerberg. But you got to call a spade a spade. I don't think that was the. I think he went all in on this transition, and which I respect. I understand like what you got to do to really grow a brand, but I don't know. You don't completely change Facebook's brand. It's almost
Their developers aren't even using it. The developers are having to be told to use it for meetings, and they're not using it for their own meetings.
Well, that's
the space that they self-created for them to work inside the metaverse, on the metaverse, they don't even use.
I think it's too early. Like, the space is still, it's there, it's developing, but the way that they're approaching it, I think it's way too early. Because, there's all of that stuff is part of, like, Web3, right? Which is, like, upcoming and whatnot, but it's like a little infant. Like, it's not even a baby or a kid or anything like that. It's a little infant, right now, that little entire space. Because there's so much to be explored. Right now, you talk to anybody about blockchain, you talk to anybody about, like, Web3, right off the bat, they're thinking, like, NFTs or, like, cryptocurrency. But there's so much more to it that people don't even know about. So I think, maybe down the road, I'm talking about like next 5 years or something, like maybe there might be a market where, Meta might be, it's in a fetus stage. So where Meta might be profitable, right? But I think it's way too early right now.
Does anybody remember us talking about the law of diffusion of innovation before?
I don't
No.
know.
Okay, Stefanos, look it up. It's basically a bell curve chart, and it talks about the advancement of certain technologies, the adoption of things. So it's basically, to Sharma's point, law of diffusion of innovation, and the entire concept is that there's early adopters, laggards, late majority, early majority, and it has to do with like just the statistical adoption rate of certain things, like who was the first. Yeah, any of those. It's that chart on the right. See there.
Oh, okay. So it's just like a law. Okay.
Yeah, but what you can do is basically a rule of thumb. You can apply it to new technology, such as, let's say, hybrid cars 20 years ago or electric cars this decade. So you talk about something like the metaverse. There's going to be your early adopters. There's going to be your early majority, late majority laggards. So you can see this when smartphones came out in the early 2000s or the mid 2000s. There was the Blackberries, and then you started coming out with the iPhones. When did your dad get an iPhone, Stefanos? Early or late?
No, later.
Right. So this also applies to cross sections of social media platforms. So where's MySpace now? It was the
this
early.
Probably applies to everything.
It was early, and then there was a lot of majority that got on there, and then Facebook came along. People moved and shifted, so you can see migratory patterns of people going in social media space from one to another, where you can make the argument that Meta is just in the super innovation stage, and so we're not going to have early adoption or even early majority yet. Just like swarms of people move to different things in social media space. Does that make sense?
Yeah, no, 100%. Like I said, I think this applies to everything, and I also think it's with what they did with Meta. Like it's again, like you were saying, it's way too early. So I kind of I was laughing before thinking about this. It's almost like the government canceling federal subsidies for the oil industry with what's it called? Trying to expand the electrical part of our country as far as electric cars, stuff like that. Like they're trying to move into that way too quick. It's almost like they did the same exact thing that the government's been doing. Where like we need to transition, and I understand that, but it's got to take time. You gotta chill out before you start making a lot of these steps. What is Sharma? What is this?
Go ahead and pull up that. It's the same exact thing. It's just that this is what I used in my master's program. Andy, the Gartner, yeah. And so if you continue down, there you go, the hype cycle. So this is essentially the same exact thing. It's just that here, if you look at Metaverse, it's in that innovation trigger. Metaverse is not just Meta though, right? It's much more than that. It's not just like Facebook's Meta or anything like that, but it is like, all about that AR, VR, all that type of stuff, just like creating a virtual space. But this is pretty much the hype cycle for any tech that's coming out. So, you used to talk about like those NFTs and everything like that. Right now, it's moved out of that innovation trigger. Now it's going into like those inflated expectations. There's even another older cycle that you can take a look at that has like all these other techs that we used to talk about that are now like kind of in this plateau of productivity. And that's by the time that these major corporations start incorporating that's when they start moving into slope of enlightenment and even the plateau of productivity. That's essentially when that tech has already been there. Everyone kind of knows about it, things like that. Like now you're looking into new things. But that's what this hype cycle is all about. Like we're way early on. That's why there's so little that people actually know about, when it comes to Web3, when it comes to NFTs, when it comes to Metaverse, when it comes to like all this type of stuff, because there's so much already out there.
And it's still participation by choice.
Yeah.
Like when big screen TVs came out in the late 90s, you didn't have to have one.
Yeah.
But people that were willing to spend $10,000 for a 36-inch TV that was flat, like they'd spent that crazy money because they just wanted to be a part of that. They wanted it early.
Yeah.
Part of me for the metaverse feels like it's already out there, like way before. Like that's what the internet is. Like we all have like our businesses online. We have like almost everything's online right now. So what's the difference between a metaverse? You just have an avatar.
This is Web 2 type of stuff. So like in metaverse, essentially what happens So the whole point of Web3 basically is that you get to control like your data. You have control over everything. Right now in Web2, we go on to like YouTube, we go onto like Twitter, we go onto Instagram, we go onto like all these different sites, and they have our data, right? And they can essentially do whatever they want with it. You literally cannot get that off of the internet if you wanted to, right? In Web3, you get to control everything. Metaverse is more like, it's virtual, but you try to get like more of this like in-person feeling or whatever. Like think about pretty much what like Meta is doing, right? Facebook is doing. That's just a very small part of it. That's what that is, right? In Web 2, this is not even close to like Metaverse, what we're doing here. This is just like an online, like a communication thing. But they're trying to turn everything that you do in person, like that real life experience, now they're trying to move that like to a digital world so you can connect with anyone, everyone.
Wow.
That's like a layman like explanation. Like I said, there's so much more out there to be learned about this entire space.
Yeah. I mean, we're just in the beginning stages, just like we saw.
Yep.
Yeah, this is interesting. I like both of these tables. So did anybody end up taking anything on gold or US 30? Are you looking at anything right now? Yeah, I'm not touching it. Yeah, I've barely taken any trades this week. I just, Sammy actually was, we were talking about it before everyone came on. It's just, you're not getting a lot of those A setups this week, right? And the big news is coming out towards the end of the week. You're waiting for that. Then you only get that much yesterday. And, you just want to stay safe. Wait for those setups.
Absolutely.
Any question on YouTube?
Let me check. No question. Someone said I moved Meta to my S-Coin watch list.
Wait, what they say?
I moved Meta to my S-Coin watch list. Like shitcoin
nice.
watch. Yeah.
That was quick.
Rahul, so go ahead and send your charts link here, and then we can pull it up and review the chart.
Let's look at your S-Coin list, all of them.
KB, I could see that happening. Get something later on. A lot of times that happens on Friday. NYC will come out and we'll get a nice little move.
Yep.
I mean, not only Friday, but, throughout the entire week, a lot of volume comes out around 10 o'clock.
Usually on Fridays, though, when there's like an important news coming out, like PCE just came out, and then you have like, obviously it's going to be a setup for next week's interest rates. Right before the market closes on Friday, you'll see like a good move happening.
That's a good point.
Alright, I could stay on for like another 11 minutes or so. Does anyone have any questions or anything else that they want to go over?
Any trades from the previous week or this week, actually, that you guys want to go over?
I haven't
Maybe
traded
you have a
anything.
question on it? You guys on YouTube, feel free to ask. Send your charts.
One thing I definitely do want to say and kind of like come back to, because we were talking about it previously and I forgot to mention, make sure that you guys are really looking at your financial situation and everything and really adjusting yourselves, because you already know what's coming up. We've already talked about it. You have all the data points there. You have the Fed talking about it too. We know that there's a recession coming up. There's already layoffs are happening, affecting a lot of real people. And majority of people don't even have like more than one source of income, right? So if you're in that pool, make sure that you're kind of already positioning yourself for the long recession that's essentially coming up. It's not going to last just 1 year. Looking at the data points, I'm pretty sure that Andy would agree with that too. It's not just going to last 1 year. We're probably talking about like a couple of years. So make sure you guys are well positioned in that sense.
2025, 26. No questions, guys? You guys are all good?
Do you think it will fill that wick US 30? I don't think it's going to continue pushing bullish after that data point
That's a
that came
hard
out.
rejection, yeah.
Yeah.
This is what we were talking about before. You know,
Yeah.
you're starting to see this exhaustion over here. You
Yep.
see, especially this rejection right there. Then you get a strong bearish close. We failed to break above that area. Another strong bearish close. You just got the rejection from the data coming out.
Yeah.
Right? We didn't get a big surprise on PCE. So you could start to see, you know, maybe we end up consolidating here, but eventually I could see us pulling back. And you could see the hints once you look at these higher time frames. Like these candles right here, you're starting to see them like turn, right?
Yep.
So you're gonna get some kind of a pullback coming into here, even if we continue up, which I don't think we'll do. I think this will be our lower high to continue down, but yeah, like she was saying, when it comes to the Fed decision next week, we could just be waiting for that.
There's only one more trading day for the stock exchange for the month anyway, so that monthly candle, whoever is trading a monthly is going to be closing out on Monday.
100%. Yeah, and forget the fact that we had PCE today and GDP yesterday. Look at the date; it's the end of the month. You know, so this is where you guys want to, you know, be relaxing for a second and really be ready for exactly what you're looking for as far as the right setups.
Yeah, being aware of where you're at.
Did you guys see? Did you guys see Twitter's news yesterday?
Yeah.
Yes.
The dad joke.
The dad joke, but it was also as soon as the deal went through, the CEO and CFO got fired.
Yeah.
Like
Well, that wasn't a
12:01
surprise.
Eastern.
Yeah.
That wasn't a surprise. What I'm curious about is who he replaces them with. Like, has he had these people in place yet? Like, is he just ready to go? Because don't you need like the ins and outs of the business and, you know, how to run it? Can I have that smooth transition instead of just?
Oh, absolutely. I don't think that someone like Elon Musk would ever go through with the deal
I agree.
without having all this type of stuff in place already.
Yeah. Yeah. This
It
is
just
months.
the way he did it. It's just like, oh, okay. Like, it makes it seem like he's just doing this on the fly, and he's just like, all right, we're gonna figure it out as we go.
No.
But that's not. Obviously, that's not.
That's not. We know that's not how business works, man.
No.
Tesla engineers visit Twitter office to review code for Musk.
Yeah, it's wild. I can't believe it actually went through.
Yeah. I mean, they're each getting like $100 million payout.
Yeah, KB, that's like a lot of work for a pun.
Yeah.
Like he just walks in with this incredibly heavy tank, just walking through the front doors of Twitter.
He has zero problem trolling people.
Yeah.
Yeah, he's hilarious.
He spent big money on that thing.
Yeah, that's no $50 sink from Home Depot.
Yeah, imagine walking into one of these like kitchen or bathroom appliance stores and just it's Elon Musk. Like, let me just get the sink. Just load it in my trunk and I'll see you later. I'm going on Twitter.
Rahul, we don't see your chart link on YouTube.
Oh,
So
wow.
I don't know where you've sent the chart to review.
Nancy Pelosi's husband was violently assaulted in their home.
Whoa.
Wow. Too much insider trading.
Basically.
Well, there goes this video today.
Yeah, right?
She told him to
Yeah.
short Meta.
YouTube and Google will cancel us.
Cave is on a roll today.
Right? Dude, I love the fetus one. It's in the fetus stage.
Yeah.
Is that Catherine?
Yeah.
That's great. You guys got plans this weekend?
Yes, sir.
Awesome. What are you doing?
My cousin's getting married this year.
Wow.
So, yeah, we're going to be doing stuff for her.
Let's go. So that'll be like the whole week next week, right?
It's gonna be well, just this weekend. We're just just a family together stuff. Because then after that, her parents are flying out to India, and then we're flying out to India too at the end of November. And I'm gonna be out there and traveling to Bali and all that stuff too for like 3 weeks, and then I'll
Oh
be
wow.
back. Yeah,
Awesome.
My wife's aunt is in Bali right now.
it's an amazing place.
She went to Singapore and then they took a jumper over to
Yeah,
Bali. She sent a picture. She loves it. I would love to go over there.
yeah, it's
I
amazing.
have actually a big client that comes over here from Indonesia with his family, and uses us for the entire time he's here, and he's here for like 3 weeks.
Yeah,
And he just gets a car, drive it the entire time. But the way he describes Indonesia, it's awesome. Like he sells it so well that I just want to go.
yeah. I mean, Bali specifically, it's paradise. Like KB said, lots of
Okay.
nomad Bali. Yeah.
Should we do a boot camp out there?
I mean, why not? I'm down for it.
Right?
We
So,
also have to
yeah.
plan our Q4 boot camp.
Yes, we do. We do.
All right, guys, we got about 3 more minutes. If anyone has any questions or anything like that, let us know. Rahul, I still don't see the link for your chart, man. I can't pull it up.
Sharma, we can start working on that next week if you want.
Yeah, let's do that.
Okay.
So let's try to do the boot camp. Sometime in November. Is that cool?
Yeah.
All right.
Absolutely.
We were planning a boot camp in Florida, so that'll happen soon. And then maybe the next one will be in Bali, and then we make our way international.
I'm there. Boot camp in Bali. I want to do a trip for the group
Yeah,
at some point.
that would be dope.
Yeah, I mean, you could always tie it with a boot camp, which we would probably end up doing, but that'll be something I'll be working on Q4.
Mhm.
Come to Paris, man.
All right, maybe. Come to Dijon.
The most beautiful city in the world.
Come to Dijon, get some mustard.
Yeah, you can do a round trip.
Dijon and what's the kind of cheese that you guys like?
Cheddar.
Is it cheddar?
No.
No, that's
No. It's brie. Brie. It's brie, right? Is that French cheese?
Yeah, we have that. That's
Brie's amazing. I love brie. I'm a sucker for cheese. Like some really good cheese.
But that's from the less fancy cheese we have brie. It's not
Brie's
fancy.
less
We have
fancy.
a ton of fancy cheese.
What's the fancy cheese?
Like we literally have a ton. Sorry.
What's the fancy cheese?
Like you have every cheese that has the name from the city it's made in.
Oh, okay.
It's like a local cheese, and it takes the name of the city, and
Okay.
this cheese comes only from that place.
How's Paris cheese?
Oh, you don't. Yeah, there's no Paris cheese. It's like
They
small,
excluded
very
Paris?
small cities, like in the countryside.
True.
Like
That makes sense.
it's gonna be Saint Marcelin, Saint Marcelin, if you want to pronounce it in English.
Yeah.
That's one cheese I like a lot.
I would love to get over to France. I just want to get over to Europe and see more of it, because obviously I got my family in Cyprus and Greece, but there's so much more to see.
Yeah, it'd be worth it to come to France, Italy, maybe Spain,
Yeah, we
maybe England. Tons of places are very much in Europe, but it's more worth it if you do the trip to visit a few countries at the time.
yeah, you have to. It's like traveling the U.S. and Europe. But
Yeah.
we flew into Vienna in Austria. It was beautiful. We could see a lot of the country when we were over there, and it looks so nice. A lot of history too. we're at 3.25, and the Fed wants to go to 4.5.
Andy, they just increased that up to 5%. They're trying to get to 5% by March 2023.
Yeah, there's no ease on the 10-year yield either. So, I mean, it dipped below 4 yesterday, and it's right back above 4 today. So there's like a real brief sense of relief, but there's just no fundamental change.
That was the move on gold, wasn't it?
I think they're going to end up increasing that target even higher, getting to the end of the year.
It has to surpass inflation. They have to get the Fed funds rate higher than inflation.
Yep.
So if they do it by force function and just let over the course of time inflation come down below that number, great. Or they have to just jump right up, hurdle it, and get right above it as fast as possible, which they did not do. But
they're expecting to stay around 5% until end of next year. And then 2024, they're expecting it to bring it back down. The only way that would happen, like you said, is if inflation starts to come down. So even with another 75 basis point hike, we need inflation to start coming back into like at least a 0%, staying like at, whatever level that's at right now, and then going into early next year start decreasing that back down. And then you can start talking about, can we decrease the interest rates? Without that, it's not going to happen.
I think the concern is that how much longer will they let it go? Because the fight is going to be the fight. It's going to take time for inflation to cool. But what's going to get broken along the way? I think that's the conversation I'm hearing a lot. What? Because you already see cracks showing up in certain industries, in certain sectors.
Yep.
And which things are going to fall victim to this primary objective?
Yep.
Because then those have their own consequences too. I mean, housing alone, by some measurements, is responsible for up to 20% of the GDP number. Okay. So if housing is getting dumped, that's a huge influence on that GDP number. And if the GDP number isn't reflective of growth in the economy, then at some point you have to start stepping back. So there's just too many factors for them to not start breaking things.
Mm-hmm.
Yeah. And all these industries are so weak too. So if one tanks, the rest of them are going to feel the effects from it.
Well, it's the intertwined nature. There's a lot of similarities to 2008 and 9 too. There's just so many intertwined facets of the markets financially and the Fed's involvement. It's just inevitable that there will be problems in one side that then spill over into the other and becomes a domino effect.
Yeah. 100%.
All right, I gotta hop off now. But are you available to do the simulation session, Steph?
Like I said, this month is very hard for Sims on Friday, but starting next week, I'll be able to do them every day.
All right. So, yeah, what we'll do is just continue on next week then, if that's cool with everyone. And then if you guys have any questions, just feel free to reach out to either of us, on Instagram, at SharmaFX or at StefanosFX. Other than that, is there anything else that anyone has any questions or anything about?
Don't be afraid to ask questions. That's how you get better.
All right, then. So we'll go ahead and hop off. But, yeah, make sure you guys are trading safe if you're trading for the rest of the trading session. But also remember that this is setting up for next week. So even if price does ends up in consolidation, then understand that market's collecting liquidity going into next week, and then you might see a lot of volume going even into next week as soon as the market opens up.